Testing, 1, 2, 3. Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 172 for Monday, 3rd of February, 2025. Hope you're all well. Hope you had a good weekend. Hope you've enjoyed this rather eventful start to the week and the trading month. Plenty for us to discuss today, as you can probably well imagine. Just for those of you joining us, whether you're joining us in the Zoom room or on the YouTube live stream, if you can just confirm that you can hear my voice and that you can see the slides, I would appreciate that. It's always good to know the technology is working in our favor rather than against us. If you could drop that in the chat box, would be really appreciative. Excellent. Thank you. Cheers. Thank you very much. For those of you joining us for the first time, the Monday Market Update is just that. It's me trying to fly through as much as I can possibly fit in the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at a couple of charts of interest you might want to add to your watch list, and then having a look at the live market. It is not a signal service. It is not a trade recommendation service. It is just, what I'm looking at and what I'm interested in, and that may be of a use or interest to yourself as well. As always, you are very welcome here. Just remember that you're always responsible for your own trading decisions. If you want a bit more education or insight, market insight this week, 2 o'clock London time every Monday, I do a webinar for active trades, Monday Market Matters. Today's one, the education element will be about using Fibonacci in your trading. You can either register on their website or you can use that QR code there to take you to that. And also at the moment, I'm also doing a Wednesday evening at 7 o'clock London time, doing a weekly update for Admiral Markets, just taking a look at primarily global markets and then just a look at the UK stock markets. And once again, you can either go for the bit.ly code or the QR code there to take you towards it if you want to join us for that. Okay, let's dig into the main element. I appreciate that if you're perhaps new to joining us or new to trading, this might look a little bit overwhelming or intimidating, but what it is it's pieces of the model that I create myself at the weekend called the STAM, which is all about looking for primarily the strength and weakness within the FX markets and then also in indices and commodities market. It's once you see it once or twice, you get the hang of it pretty rapidly. What are we looking at here? What's it actually telling us? Well, here we are into week 6 of the year already for the 3rd of February. Now, of course, I've done this on normally do it over the weekend, or Saturday morning or Sunday morning. I still do it by hand because I find that doing it by hand is the best way for me to be connected to markets, to basically identify opportunities and just get the best sense of the market itself. One of the reasons I do it is because it also helps me sort of just focus and prioritize my time, energy, and resources much more effectively for the week ahead. But I appreciate that doing my normal block and and what that's telling us, and also what's actually happening over the last 12 hours or so. There's been a little bit of difference, a little bit of divergence, and we will. I'll look to sort of merge them both together to sort of give you a help and a bit of insight into what's going on. So, when we're doing this based on last week and the weekend, okay, we still had dollar as number 1, top of the pile, okay, the strongest, along with Japanese yen. Along with Kiwi dollar and Canadian dollar at the bottom of the pile, and this was really even before we had the announcement of Trump's tariffs, okay, and them sort of coming in, saying they're coming in. I think they're coming from tonight, okay, into tomorrow if they go through with them, and what's happened there is we can see that he's looked to place I think it's 25% tariffs on Mexico and Canada, along with 10% tariffs on China, and of course lots of people have seen this as the start of a trade war, which undoubtedly it will be of one sort or another. But if you actually listen to the guy's commentary, a lot of it is to do with basically he's annoyed at the the amount of fentanyl that is being basically imported into the US, or drug running into the US, and the effect and damage it's having upon it. And actually, I can fully understand that. I read a book by a journalist, Sam Cooper, about 3 years ago called Willful Blindness. It's well worth the read because it'll just give you exactly a shocking insight into what's been going on, especially and particularly in Canada with that. And so I can understand that element of why Trump is doing that. I also think he is, as I've just seen there on one of the TV channels, is that Trump also needs to basically have a bit of a money grab. He needs to get some cash in so that he can start cutting taxes. That's my other somewhat cynical view of it all. But ultimately, whatever it does, we as traders, we're just looking to mitigate or minimize the opportunity for it to be a threat, and preferably look to see, well, actually, how can we turn this into an opportunity? How can we turn this to our advantage? That's what we're looking for as traders within particular markets. And so, we saw continued strength in dollar and yen. And if I look at here, okay, from what we've looked at over the year, sort of last, was it 12 or so hours or so since, just over 12, 13 hours since the markets opened, not unsurprisingly, US dollar and Japanese yen still remain strong. And actually, pretty much the majority of those other currencies have weakened. And not unsurprisingly, things like Canadian dollar, euro, which Trump has said is, they're probably next in his sights as well. They have invariably sort of weakened there. And you can see that that's not a particular shock. Sterling, okay, sterling at the moment remains in third place, okay, on the stand. Will that be the same place by the end of this week? If I'm honest, I couldn't sort of say with any real confidence because, of course, we've got an awful lot of an awful lot of American data this week. In fact, we've got American data coming out every day this week. So we've got manufacturing PMIs this afternoon, and you've got JOLTS jobs openings tomorrow afternoon. You've got ADP and services PMI on Wednesday. You've got unemployment claims on Thursday. And then, of course, you've got non-farm payrolls, unemployment rate, and average hourly earnings on Friday. So there was a lot of US data coming out this week. And of course, also on Thursday, we have UK data in the MPC meeting, okay, and the MPC rate statement. So most people are baking in the fact that we're cutting interest rates from, what is it, 4.75% to 4.5%, okay, just following basically, what Europeans did last week, what the Americans have done as well, okay, this month. And, we will see how that plays out based upon this kind of background and context of the start of particular trade wars. So will sterling still be in third position by the end of this week, or will it have been a complete rug pull? I generally, it generally could go either way, all right? So, and I think that's probably the overall theme for the whole of this week, is that we've seen some reaction to those tariffs last night. I think it was up to about 1:30 last night, watching and engaging and enjoying, if I'm quite honest, as well. And I think this week we will see a wide range of, I suspect, volatility spikes as we see sort of political grandstanding goes on in terms of countering comments, etc. So this is most definitely week, as I say every week. You want to be on top of the news flow. You want to be on top of your risk management, okay, and you basically want to be keeping your powder dry for the best opportunities. And don't be, especially if you're day trading, etc. Don't be afraid of basically sort of jumping out if it looks like it's turning very quickly against you, because, as I said, I think we're going to get a few volatility spikes, which kind of brings us on a little bit. I'm going to jump about a little bit today. You'll have to bear with me. VIX last week actually was bearish and ended 17. This morning it was trading up just underneath 20, and lots of people going on and talking about how, because the VIX hasn't really sort of skewed higher massively, that basically all this tariff talk is overdone and won't fall through. There's two elements to that. I agree that there is a possibility that Trump is whether you love him or loathe him, he's a great negotiator. He's great at putting the cat amongst the pigeons in an effort to strengthen his negotiating position. And he will quite happily take a negotiated outcome as quick as he possibly can. Okay, that's the way he plays these things. So there is an absolute possibility that maybe the tariffs is just it's a warning shot across the bows, and countries start to fall into line, and and everything goes back to being hunky dory. The other side of that is that people saying the VIX hasn't skewed higher. I've had for about the last 18 months or so, I've had a view that the VIX has become increasingly less useful to traders. One way or another, it seems to be. just less useful to traders, okay, in terms of how it's basically putting out the numbers, how how it's basically being utilized, and the readings we're getting from it. I'm sure there's people who with far better and deeper insight into the deeper fundamentals of how market structure is created. Okay, probably explain it better than I can. I can only just go and looking at it week in, week out, and sort of just seeing whether I use it as a tool to help me, or whether it just leaves me with a kind of sucking teeth moment. And to be fair, there's a fair bit of that. Now, normally what I would do is I'd normally have a piece of my heat map in on sort of all the sort of stam currencies and how they're playing out. But I appreciate things are changing rapidly from when I did my stam at the weekend and where we are now. So I took a screenshot of the plugin of the stam plugin that VTP stage 2 people get, and really all that's doing is helping me confirm that yen and dollar still remain the strongest. Okay, with that Swiss franc is strengthening in a risk-off environment. That shouldn't really be a particular shocker. So sterling gets dumped to fourth place, but it still remains strong. But look at Canadian dollar. All right, Canadian dollar, Kiwi dollar. All right, they're pretty much they're at the bottom of the pile. Aussie dollar, they're okay. So those kind of condols, risk-on currencies, they're pretty much the bottom of the pile. That shouldn't come in as a particularly massive shock there, as we'll look at the charts in a moment. In terms of indices, okay, last week DAX, FTSE, okay, and Dow were all still strategic buys. But what we will see is, well, we'll look at the charts in a moment, how they gapped open, okay, last night for us, and how they've played out there. Gold has been interesting price action, silver as well. All right, they are still clinging on to being strategic buys, but we will have a little look at how that's playing out. Initially, oil traded well, okay, this morning on the open, but that's kind of fallen back a little bit as we see some of the shenanigans. Not unsurprisingly, Trump wants oil prices down. He wants cheap energy to basically help economies grow. No surprise, no surprise there. Whereas opposed to our interesting politicians here who seem hell bent on basically rising the price of energy to basically suck any life and growth out of the economy. But anyway, let's not get started on any more appalled middle-aged man rants. All right. Ultimately, as I said, we're just looking to see how this can help us with our own trading. And so the picture is going to swing about a little bit this week, not unsurprisingly. But as I said, dollar and yen and Swiss franc risk off are in command, and the risk on currencies of the condols is at the bottom end of the pile. Not a massive shock, okay. So, but I will be trading in line with that until I see or hear anything to change that. Okay, let's have a little look at just a couple of charts of interest. I don't want to spend as much time in here. I want to get across to the live markets. Normally I do about 4 or 5, but I think I've only just put in 3 for this week. First one is Palantir, because they've got their earnings. Okay, even with all the news going on, there is quite a full earnings calendar for this week, and these guys coming up this week. I think it's actually after the close tonight. Palantir, okay, tech company. Also sort of, lumped in with the AI bubble, shall we say, the kind of strong AI trend that we've seen in the last couple of years, which you can see for yourself. And also, as I said, they've got their earnings released this afternoon. You can see from here, all right, this is a weekly chart of Palantir. You can see that has been, quite a lovely uptrend. You hear me talking about to new traders about, good trends should leap off the chart here. You don't need to force it. You don't need to push it. Your job is to basically to find a nice trend like that and then just try and capture a piece of it. We can see that last summer, okay, we had this kind of really huge, big bullish engulfing, a little bit of a pullback to the 20, big bullish engulfing, and then we've just worked our way as a kind of a teaching thing, or insight into my own style. I always start getting nervous once price starts going vertical, going parabolic, pulling away from the moving averages. I always start to get a little bit nervous, because I don't think anything can really truly defy gravity for that long. And as we can see here, even though we've had a fantastic run there, okay, over the last year, absolutely fantastic run, topped out just over 80, and now last week we just kind of nudged our way, a little bit of a false breakout above the high, but still that's still the highest weekly close ever. But I would look at that is a bit of a double top there. The pre-market is down a little bit there, okay, so I'd be looking just to see what does the what does the news, okay, what does the earnings release, what does that do for us based upon the kind of context of what's going on based on last week's little last week's little AI's tantrum, and also because of what's going on over this last weekend and stuff. Is it going to be able to shake it off and push it to new highs, or might we just get some profit taking and a roll back to that kind of neckline at 64? So I would be watching that this afternoon, this evening into tomorrow. Okay, I think that could be quite an interesting one. You might want to add it to your watch list. Another one, maybe let's say an older tech company, PayPal. Okay, PayPal once again, weekly chart here. You can see that and as I always say, excuse my artistry. I'm a better trader than I am an artist. That was kind of a nice descending wedge that we had that going on over years. Okay, we had a flush to the lows in terms of we flushed and then we started to base and then we started to break out. Okay, and there's a nice opportunity to get long in PayPal there in the weekly chart. But a bit like Palantir is that we've had a great run over the last year in terms of US tech companies, okay, but once again, I would see that as a bit of a double top that we have created there around about the kind of $90 big round number. Last week was a little bit of a bearish pin bar, a bit of a bearish rejection candle. I think these are out. Their numbers are out tomorrow before the open, I think. And once again, is it going to be a case of, are the numbers going to be so great that it basically defies gravity and everything's going on and pushes back up above 90? Or do we get a case of, people use it as the earnings as an opportunity, as what they call a profit release on news? People take the news, take the profits, and we once again, we sort of work our way back down to about $82, that first level thing. So that's what I'd be looking at there in this particular moment with PayPal. And finally, proper big old company, big old blue chip, Ford Motor Company. Okay, so I'm kind of intrigued in this. Okay, they are out Thursday after close, but we can see this is once again the weekly chart here. From the highs up here, okay, about 4 years ago of $25, $26 of where we were working our way up to and stuff, what we were looking there, once again, you can see price went vertical. And then basically, as always, okay, it just rolled its way off this. And I think a lot of this was basically the initial element of them sort of, completely coupling themselves to the EV story, okay, in terms of the future of the motor company. And then, of course, as all of those sales fell away, you can see that basically the share prices followed that. And that is almost like a kind of descending triangle there with the kind of support level here at $10. Look at how we are, and that's exactly where we are. Pre-market's open a bit beneath it. But, the case is, other numbers going to help us just basically continue support at 10. Could we get a little bit of a bounce up to about 11.50? Or do we just basically see them come out with something exciting new based upon Trump being in charge now that gives as I said, gives the market a bit of a pump? Or are we just going to continue to just pivot around $10? Okay, so as I said, I've been watching that around for Thursday to see how markets react to that based upon looking at trying to drive down energy costs as well. Okay, so there you go. Some charts of interest you can add to your watch. Let's see how they play out this week. Let's switch across to the live markets now. Okay, take a little look there. So just bear with me a second, and we'll switch across. So just bear with me a moment, please, ladies and gentlemen. Right, let's. Okay. All right. So I'm hoping that you can still hear me. I'm hoping that you can now see charts. So this is just it's a profile of mostly the sort of kind of indices and some of the commodities to look at. So we've got Dow, NASDAQ, S&P 500, Russell, FTSE, Nikkei, DAX, and oil. As I said earlier, this is I normally have these on the weekly, but I have this on the hourly, okay, just based on what we've been seeing. But initially we saw a big thrust up there, okay, $75, from Friday afternoon into this morning. And then basically we fell back, but now we're starting to grind our way up again. And I think what we're going to see is that oil is basically going to that oil price is going to be worked. It's going to be maneuvered around by what Trump says, by what OPEC says, by what the Canadians do, etc. So don't be surprised if you see that if you see those that price kind of pivoting around quite a bit over the next couple of days. All right, I suspect it's going to be likely to be volatile. So as I said, make sure you're managing risk and make sure you're keeping your powder dry for the best opportunity. Let's have a look at the Dow. All right, because here we go. Dow. This is the weekly chart. Fabulous uptrend. We pulled back and then we had this bullish engulfing candle, bullish key reversal, and we pushed our way up. And I was talking about, could we get to new highs in the Dow? But actually, what we saw was last week, we ended that. That's a little bit of indecision, isn't it? A little bit of indecision. And as we can see, if we go down to the daily chart, Friday, as it started to become apparent that the tariffs were coming, having had this great run for the second half of January on the daily chart, what did we print there? We printed, a bearish daily key reversal candle. And then you can see for yourself here, when we go down to the 1 hour chart, bang, we started to slide away at the start of Fridays, okay, down to the 1 hour 200, and then gapped all the way down and continued down. Now, we did have a little bit pull up, but that's not a surprise, all right? Okay, at one point or another, somebody will step in and buy them for one reason or t'other. The question is, can when the markets, American markets open in what's that? In about 100 minutes, will there be enough buying power and enthusiasm to buy the dip and fill the gap? Or will we just basically see it as I said, people using it as an opportunity to basically take their profits and run for the hills? If I'm honest, I don't really know. I personally right this minute, okay, and that's fine. Okay, that's fine. I am happy to let the market, show the way. Okay, I don't feel the need to be a hero or to sort of try and stamp my authority or project what I want onto markets. When markets are volatile like here, I'm happy to let them lead the way and happy to ride them. Remember, as you hear me always saying, ultimately you're just looking to be a surfer, and to try and surf the biggest and best waves. But you can see for yourselves here, all right, Dow, we've had a gap. And actually, we're kind of pretty much gone sideways. NASDAQ, we had a gap. We came down a bit. We've tried to pull up, but we're into the gap, but we're nowhere near filling that gap. And the same S&P 500 gapped down. Okay, had a little bit of a fall down, come back up, and now we're just consolidating in front of the American Open. Russell was the same. Okay, pretty similar. All right, pretty similar price action there. Closer to home, the DAX. That DAX had as well, okay, and you might say there's a bit of a double bottom there, okay, and we've run up to that 1 hour 200 period moving average, but DAX isn't now making a move until the Americans make a move. Nikkei, okay, that slid off and continued down, start to slide down again a little bit, but once again, it's gonna do what it wants. FTSE started to slide. Yeah, it gapped, and really it's gone sideways, pivoting around the 1 hour 200 period moving average. And Mr. Starmer has gone to sort of, I think he's in Europe today, isn't he, talking with Olaf Scholz and stuff, the Germans and stuff, offering himself up as usual to basically probably get us back with alignment with the EU. I suspect, as you've heard me say all along, I suspect what will happen is, crises like these will be used as a way and a means to sort of tell us that, we can't fend for ourselves in a modern world, and that actually we have to go back into the warm embrace of the bosom of Brussels, which is absolute nonsense because they're in a far worse state than us. But there you go, that'll be Starmer for you. But anyway, FTSE's going sideways. Nothing really terribly exciting. Everybody's waiting to see how the American markets open. Everybody's waiting to see what Trump says this afternoon. Okay, everybody waits to see how the Canadians and the Mexicans and the Chinese, okay, sort of retaliate. And this is kind of, it's a bit of a phony war. We've had the few opening strikes, bit of a phony war. Everybody's sort of licking their wounds a bit. Everybody's sort of kind of looking at what the hell's going on. And then once we start to get into those American markets, then we'll start to get a bit of an idea, what will happen. So as I said, it's going to be an interesting and eventful week. Those of you looking at gold, okay, bang, on the daily chart, in fact, last weekly chart, okay, we closed at weekly highs there. Okay, we closed at weekly highs and we had this run. We talked about breaking out of this symmetrical triangle. That is, a standard continuation pattern. We closed to weekly highs. Okay, we had a little bit of a pin bar, just almost like a false breakout on the daily, right underneath 2800. And then, we didn't gap down per se, but we just had a kind of a rather volatile opening. We did drop, and then you can see for yourself, all right, everybody's been buying that up there, haven't they? That has just basically been strong buying back on our gold, and everybody's worried, all right. So what do? They're probably buying bonds and gold. That's probably what we're going to see. Same with a kind of silver as well. We talked about, this is the weekly chart silver. We talked about how we'd had a double bottom here at the end of last year. We were just grinding our way above $30. We were back up above the 20 period moving average. Daily chart, we had a strong end to the week, a little bit of indecision. We dropped down, but we've come back. If we go down to the hourly chart, there we go. We actually gapped up on the opener and then fell. And then basically just have used the 200 period moving average there as dynamic support, and we're now working our way up. See whether it has the strength of the gold to push on, or whether we get kind of tempered by the 50 period moving average. So watch to see how that this afternoon plays out. All right, we've looked at that. Quick on Bitcoin, we don't really cover it massively, but what we had. We looked at the turnaround. Okay, we looked at that turnaround. That's a kind of bit of an evening star that has been building as part of a double top. Not surprising, we dropped our way down there. Okay, you can see that invariably. That's what we've done in the daily. We did drop, but we've come back a little bit. I was looking at this kind of level here, this kind of neckline here around about 92,000, but we're still staying up above it. 1 hour chart, okay, over the weekend, you can see that we accelerate down, but we've come up. Now I'm going to be interested to see, does that 1 hour 20 period moving average, which has acted as nice dynamic resistance, does it continue? All right, does it continue? In which case, I think we go back down and test those lows. But if it breaks it, well, we're up to the 50. So that will be my afternoon plan. I'll look at there. All right, let us have a look at the dollar then. All right, so I said I'm going to try and fly through as much as I possibly can. We'll have a look at dollar, then we'll have a quick look at Canadian dollar, Japanese yen, and sterling. All right, that's what we'll look to finish up on. All right, so try and get through as much as I possibly can. We'll probably overrun a little bit, as I said. There's lots to cover today. There's lots going on. It's going to be a rather eventful and interesting year. As one of the guys, James, said on the VTB Discord, it's going to be an interesting 4 years. I think it's actually going to be an interesting 4 days. Let's not. There's going to be enough going on in the next week, to keep us busy, and we don't need to worry too far ahead. All right, just make your brain blow. All right, this is dollar, my dollar profile. Okay, so Aussie dollar, Euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar Canadian, dollar yen, dollar index. Okay, let's quickly look at they're all on the hourly charts at the moment. Let's have a quick look at the dollar index. Bosh. Okay, the daily chart. We had pulled back last week, and then you can see, bang, we're gapping up, and gapping up there on the open. You can see, whoomph, there we go. We're coming off a little bit there. That's not a massive surprise, It's not a massive surprise. There's always somebody somewhere taking profits. There's always somebody somewhere liquidating positions that they're on the wrong side of. All right, so that's not a massive surprise there, and especially when you see how is that playing out in other markets. So we have to have a look at the euro dollar. You can see for yourself, the euro dollar's done the exact opposite. It gapped down, and we are. We're sat above. I look at us on the 1 hour chart. We're sat up above the kind of 102 handle, I'd say. But if I just go out a little bit, you do start to have to consider, with that dollar strength, and if there's tariffs on euro, are we now going back to parity on the euro? That's what I'd be looking at. And so, of course, we'll be interested to see what the Europeans have to say this week. But some people might look at that as a triple bottom there and say, Paul, there's clearly support just above 102. There might well be, but for that support to show me it's got legs, I'd need to see it breaking above that 20, and of course then getting back to fill the gap there. And it's kind of a similar story there. Look, Aussie dollar kind of dropped. Okay, a little bit of a pullback. Kiwi dollar, it gapped down, carried on through, and then pulled back a little bit. All right, as we said, cable we'll look at in a moment. The kind of interesting one is dollar yen, but we'll look at that in a bit more moment. And of course, Canadian dollar, but we're going to look at them now anyway. So dollar strength, that's the order of the day. I think I put a post out about that yesterday and stuff, just saying that's what we were looking at. Right, if we go to Canadian dollar, because of course, that's what we're looking at. So dollar Canadian, these are 4 hour charts. So if I look at euro CAD, it gapped up a bit, but it's come back down a bit, and that's probably because Euro and CAD are probably they're trying to work out what's the score there. Aussie against CAD, okay, gapped up on the open, but has come back, come back into this way. Pound against CAD gapped up, but has kind of come back a little bit. Kind of where we started to get interested. Not unsurprisingly, CAD against Japanese yen, we gapped down, and we've not really come. We're going sideways, and that's an indication of that kind of yen strength. CAD Swiss franc here, we've kind of gapped down. We have tried to pull back a little bit, all right, but I would be probably expecting Swiss franc to continue to strengthen. Kiwi against the CAD is just madness, right? Okay, like Aussie, it's gapped up on the open, but of course it's come down as the session's gone on, and really we're in no different place than we were. Dollar against Canadian dollars, the kind of the big one, of course. And that's what we've seen. We've gapped up the 4-hour chart, really nice bearish pin bar there, and we've started to roll away there. If we go to 1-hour chart, 1-hour chart is like a pin bar's formed by a 1-hour evening star formation. Okay, probably kind of a nice. There's as I said, there's always somebody taking profits. There's always somebody on the wrong side having to liquidate the position. So nothing ever moves in a particular straight line. Let's have a quick look at yen, quick look at sterling. All right. This are yen on the 4-hour charts. Okay. So yeah, dollar yen. All right. Dollar yen gapped up. Well, it didn't gap up. No, it actually gapped down, pushed up, but then has actually come back into that area there, right? And that's probably the fight that's going on between dollar and yen in terms of where the strength is, where people are putting their risk off money. But euro yen, okay, euro yen, we gapped down, we tried to come back, but it's back down, it's trading at the lows. That's not a surprise. Okay, we're down there. Aussie yen, we gapped down, okay, we pushed, we flushed, and we're back down, heading down there towards the lows. CAD yen, we said the same, okay, all right, it's tried to push up, but it can't. Pound against yen, we'll do it now. Yeah, pound yen gapped down, pulled up, but then has fallen down again a bit. We've flushed those lows. There might be a little bit of a response to that, but hopefully you'll get the idea. Even interestingly, kind of Swiss yen gapped down and then filled, but then has kind of fallen down again. All right, so there you're looking at who is literally, which is the stronger risk off currency at the moment. Kiwi yen, no surprise there. Okay, Kiwi against strength v weakness, it gaps down, it messes around for a bit, but it's continuing down. All right, and that is just confirming to us that yen strength is also the name of the game. So you've got dollar strength, all right, and you've got yen strength, and perhaps a little bit of Swiss franc strength. Okay, especially against the condols, and now we'll just have a quick look against sterling as well. So to finish off, so sterling here. So kind of what am I interested in? Well, we've done pound against sterling. We gapped down, okay, and yeah, we're still low, even though we've got a little bit bullish in the day. Okay, from its open, it's still nothing in terms of a bullish move there in any way, shape or form. What we can see, pound against New Zealand dollar, okay, has just basically continued to strengthen today. So that's just confirming New Zealand dollar weakness. Aussie did the same. Yep, we have pulled back a little bit, but it's continuing kind of Aussie weakness. Pound against Canadian dollar, all right, that has been strengthening. I had a really nice long trade anyway into this, but pre tariffs. But we've just gapped up there, and yeah, kind of the Canadian dollar is going to get a little bit of a thump in here and stuff. But when I look at the kind of the interesting ones, if I look at basically pound against dollar, we'd had a nice pullback up to 125, hit the, we talked about this last week, hit the 50, the 125, and basically last week had worked our way down quite nicely. If we go down to the 4-hour charts, we'd worked all down, and then we gapped, and then we basically flushed, and then we've tried to pull back. That's interesting. Sterling is trying to, there we go, build its way out there. Okay, will it fill the gap today back up to that 50? Could do. Trump says something, Starmer says something, might just be enough to give it a bit of a pump. So I would be watching that. All right, that, as I said, more have to do with dollar than anything else. And then finally, euro against dollar. Euro against dollar, we had been in a downtrend all through 2024 on the weekly chart. We talked about it. We pulled back up to the 50. 50 just acts as this dynamic resistance it bounces off, which it has, and it continued to fall through. And then after the after the euro interest rate cut. That would have been here. We've just continued lower. Now, of course, this could change after Thursday on our own interest rate cut, but we're back beneath the sort of daily 50 there. Okay, that is just literally, that is a proper grand old Duke of York there. March them up to the top of the hill and then march them down again. And that's where we find ourselves with euro sterling. Okay, and as I said, that could change on Thursday, and it might be a case of, which one of us gets which one of us gets the least shitty treatment from Trump? Is it going to be the UK or the EU? That might be what defines any form of strength there. Okay, ladies and gentlemen, let us draw it to a close there. Okay, as I said, I apologize that I'm just trying. We've overrun a little bit, but I'm just trying to share with you as much as I possibly can in this kind of a half an hour, right? And especially on a volatile day and what's going to be a volatile week. I hope you found that useful. I hope that's given you a little bit of a heads up and insight, okay, on what to look at for the week ahead. Listen, as I said at the start, it's going to be a volatile week, so make sure you're on top of the news flow. Make sure you're on top of your analysis. Just remember, you can do the best technical analysis in the world, but if Trump comes out and says something, that will just get that'll get cut through like hot, like a knife through hot butter. So, hence why more so even now than ever that you make sure you're managing risk and that you're on top of your business. I hope you all have a fabulous trading week. For those of you on VTP, the calls will be tonight and tomorrow. As I said, you can join us for the calls with active trades and admirals. Other than that, have yourself a fabulous trading week, everybody, and I look forward to speaking to you soon. Take care and trade well, everybody. Cheers.